Alrighty, everyone. So in this week's breakdown of the S&P 500 index, I'm starting with SPY, the S&P 500 ETF, and I want to go over my Elliott wave analysis of the S&P 500. I've been doing this for a couple weeks now with my team in my weekly trading plans, but I want to share all of this with you. So in my opinion, SPY and the S&P 500 index itself is undergoing a wave 4 correction. Okay, so we have zero. We have wave 1 ending right here, wave 2, wave 3 ended only a few weeks ago, and now wave 4 is underway. So keep in mind, wave 4 is only a correctional wave during an overall uptrend. Okay, so SPY, you can clearly see SPY has been in an uptrend since bottoming out in October of 2022. So wave 4, you see a lot of people getting hyped up about the bearish reversal and the three red weekly candles for the first time in months. Keep in mind, wave 4 is just a correctional period. It's profit taking, it's a natural ebb and flow of the market cycle. And so far, a higher low has been in place. And if this works out according to this analysis and my plan, it's going to be another higher low that is eventually put in place. And wave 5 should lead to a new all-time high if this does play out. Now, I want to very clearly say this is open to new information from the market changing this analysis. Okay, and I'm going to go over that in just a few minutes here. So wave 4, in my opinion, is eventually going to lead to SPY trading down into the 50% fib level of this long golden pocket drawn right here. So 420, which is right here, is my overall long target for this wave 4 correction. However, depending on the strength of sellers, we may see wave 4 go lower to test the point of control for 2023 so far and the golden fib. So we might see SPY break 420 and trade lower into the 411, 410 area where the point of control sits, plus you have the golden fib. Between the point of control and the golden fib, those are two strong technical support levels in or by themselves, and you just so happen, coincidentally, of course, these two levels are right on top of each other. So around 412 to 410, I expect a longer term bottom for the SPY to be found if we don't see a bottom at the 50% fib level. And I expect that bottom in between this $10 range to be the completion of wave 4, and it will then trigger wave 5 to the upside, which in theory should lead to a new all-time high, according to this analysis. So I want to keep in mind, why is SPY going all the way down here? And I want to share this with you. It's because price is going to be in search of value. So if we see right here, there's a large HVN built around the 420 to 410 area. And for those of you that don't know, an HVN, when I say that, it means high volume node, or it's a value area. So price is always going to be in search of value. Well, you can see as of now, there's little value up above or with these higher prices. So price during its correctional wave is going to be in search of value. Well, since price wants to go looking for value, there's not a better place to look for value than right here below 420. So we see at 420 right here is where that HVM begins. And of course, why I mentioned the golden fib and of course the point of control is because that's where the high volume node gets really strong. And we saw a lot of action previously here back in January, and we saw a lot of sideways action for about almost right around 2 months in this $20 range right here for SPY back in the spring, and that eventually led to the strong rally to 460. Okay, so wave 4, price is right now in search of value, and I think as of now, price is going to bottom around 420 to 410. Okay, now this is always open to new information. Keep in mind, this is going to be potentially a shallow retracement, maybe a deep retracement. SPY could bottom this week at 430, or it could have put in a bottom last week. So I will update this every week in this series, and we will track wave 4 correction, and we will see where the bottom looks to be in place. For now, I would not consider wave 4 to be done until we see a weekly bullish reversal candle. Okay, I want to say that one more time. I do not consider wave 4 to be done until we see a weekly bullish reversal candle on the chart. Okay, so I'm going to wait for price to tell me wave 4 is done, or invalidated for that matter, before I just dictate whether wave 4 is done or not, okay? And as far as invalidating wave 4 goes, because we need to be flexible, we can't stay stuck in a long bias potentially here, a weekly candle closing below 410 would invalidate the long thesis for me. If we see a weekly candle or two close below this point of control and close below the long or the golden fib, at 410, that would invalidate the wave 4 correctional thesis for me, and we may see stronger selling down into 400 and possibly below. So with that being said, this is my little piece of using Elliott wave theory, and looking at SPY. I now want to pivot to ES. Of course, it's the same index. It's the same market. However, I want to look at a few different charts here. So I want to look at the ES daily chart here. Friday's candle catches my eye. So just a few moments ago, I talked about how SPY is going over through a wave 4 correction. All right, keep that in mind, because that is longer term vision. Okay, that's a longer term path. That's a longer term chart. We're looking at the weekly chart. Okay, I don't want you to get confused a longer term trend with the more intermediate trends that you can see on the lower time frames, such as the daily, the 4-hour, and the hourly. Friday's candle catches my eye. Now, keep in mind, I have the same long golden pocket drawn, or the long GP drawn using the same swing high and swing low that you just saw on the SPY chart. Okay, so these fib levels are the same, but of course they're going to be different because we're looking at two different indexes here. We're looking at two different ticker symbols. So Friday's candle damn near closed as a long-legged doji. For those of you that don't know, a long-legged doji is a bullish reversal candle. So we see the long lower wick, and we see the candle closed green. We also see the increase in volume showing buyers are present. Well, it's no surprise that buyers defended this level because it is old resistance that we can see right back here in the beginning of June. Old resistance is now briefly turned into new support right at the 4350 level. Okay, keep that level in mind for when I go over the next part of my weekly analysis, which is going to be the bull Liz for the week. All right, this daily candle looks to me as if SPY or the ES has put in a intermediate swing low, meaning the selling pressure to the downside may be done for the shorter term. Okay, a daily close below 4350 right here, I have it marked now on my chart, invalidates this intermediate swing low. Okay, now assuming we see an intermediate swing low here, we're going to see price eventually start to drift higher. Now, it's not going to be a clean move, but I do think we might be seeing a shorter term bottom forming, assuming the 4350 level in ES is defended and there is no daily close below. Longer term, maybe within the next 1 to 2 weeks, I would not rule out price testing daily supply right here from 4485, beginning at 4485. Okay, so daily supply begins at 4485. If we see ES test daily supply, I think that is a very good area to explore short trades in the S&P 500 index, whether you trade ES, whether you trade SPY for my options traders. When we see 4485 print and when we see that level tested, I think it offers very good risk versus reward for short positions. Now, I want to show that on the chart. So this is all forward-looking analysis, okay? Keep that in mind, please. Obviously, we wait for price to come to the levels to capitalize on trade setups. Okay, so I'm talking about swinging short trades here, and it offers, from a swing point of view, very good risk versus reward for short trades. We want to wait for price to come into that level, okay? So on a test of 4485, here's our risk versus reward. It's pretty good. It's a risk versus reward ratio of 4.28. So we're risking about 30 points, just over 30 points. And so daily supply ends at 45.17. A daily candle closing above 45.17, or you can round up to 45.20, would invalidate this short setup as a swing. Okay, so we're risking about 30 points to the upside. However, a reward is 135 points. And so the downside target here would be this lower wick right here for ES. The lower wick on Friday's daily candle at 43.50. That is the downside target. So obviously we would wait for price to test daily supply right here. We enter short positions. Our stop loss is up here at 45.18, I believe it was. I don't remember off the top of my head. And then, of course, this is our downside target, which is Friday's lower wick. Okay. Last but not least, I want to pivot to the weekly volume profile chart. And this is where I'm going to get into my levels, my precise levels for this week's action early on. Okay. So heading into this week, again, see Friday's daily candle on ES. I think a longer term, or not a longer term, an intermediate swing low has been put in place, but the bullish Liz line in the sand for bulls this week is 43.50. They cannot let a daily candle close below that level because it invalidates the long thesis that I just went over for price bouncing higher to test the 44.80 plus levels. Okay. So assuming we don't see any action below 43.50 this week, an intermediate long target that I think can be achieved in the first half of this week is going to be 1 hour supply from 44.17 to 44.27. Okay, where do I get this hourly supply zone from? Where's the ellipse tool? Right here? Right here. That impulse move lower right there, that's where I get hourly supply from. I fully expect sellers to defend the 44.17 up to the 44.30 level with everything they've got. Okay, and reason being I expect sellers to defend the 44.30 level is because of this volume gap right here created last week during the sell-off. Okay, this volume gap will be filled eventually, but we never know when. So coincidentally, there's a high volume node right here, which is going to act as resistance potentially. And of course, right at that volume node, we've got supply beginning at 44.17. So on the first test of 44.17, I think it offers very good risk versus reward for a short position. Okay, last week's point of control is 43.82. Assuming there is no breakdown below 43.50, I lean towards, this is my personal lean here, okay, always open to new information generated from the market to change my biases and to change my levels and setups. Assuming this level remains intact, I expect ES to test 44.17 in the first half of the week. Maybe it comes Monday, maybe it comes Tuesday, maybe it comes Wednesday. I expect that this hourly supply is going to be tested within the first 3 days of the week. When that is tested, it offers good risk versus reward for short positions, okay? You have a pretty tight stop loss. Let's look at a hypothetical setup here. So you can use, I would never recommend using a 10-point stop. That is very, very big. But for my SPY traders who trade options, you can use a $1 stop. So every 10 points in ES is just about $1 in the SPY. So using a $1 stop loss does offer a little bit better risk versus reward. It's still kind of big, but you can still use it as a stop loss if you want. So 44.30, excuse me, not 443. 44.30 is going to be the bearish Liz for the week. Okay, so we're looking at just about a 70-point range between my two Liz levels that I mentioned. Okay, 80-point range. So I'm going to go ahead and type this out for everyone just so you can visualize it. 43.50 bull Liz. And then we have 44.30, bear Liz. All right, and so in my opinion, when either of these levels break, 43.50 to the downside or 44.30 to the upside, we're going to see a directional move in the S&P 500 index, okay? To reiterate, that move comes with a daily close above 44.30 or below 43.50. Okay, above 44.30, excuse me, price is going to fill this volume gap, which I mentioned right here. Sellers do not want this volume gap filled, which is why it is the Liz, and coincidentally, quotes around that. Hourly supply sits right below it. So the short setup is there on the first test only. It's only a high probability trade on the first test. The second, third, fourth test, if that happens, it's a low probability trade, and I don't necessarily recommend taking it, even though sellers can defend this level hypothetically 10 times or more. Okay, only on the first test is it a high probability trade, and that's what we want to focus on. We want to focus on high probability trades. So with a break of 44.30, price is going to fill this volume gap higher, and we can see price test 44.60. That is my upside swing target. With a break of 44.30, it is 44.60, which is where the next high volume node begins, and we can see it is a resistance level. So there's about 30 more points of upside once 44.30 or the bear Liz breaks. Now this could potentially come later in the week, but they have to take out the sellers defending hourly supply and defending the 44.30 level. I don't think price trades 44.60. Again, this is my personal opinion. I don't think price can trade 44.60 without rejecting 44.30 first. They have to clear out the sellers that are sitting at this zone and at this high volume node right here. Okay? Looking to the downside, a daily close below the bull Liz of 43.50 can set up the next leg down. Okay? It will invalidate Friday's reversal daily candle, that I just went over. Okay? And the downside swing target that I have on a daily close, I want to keep that in mind, a daily close below 43.50. The downside target for me is 42.85. Okay, so over 50 points of downside, or right around 50 points of downside, on a daily close below 43.50. Okay, not an hourly close below. A daily close below is a bearish event occurring. If we see a weekly close below 43.50, that is an even stronger bearish event occurring, and it signals the next leg down. Okay, and keep in mind, when we looked at the SPY weekly chart, my overall bias is still a wave 4 correction to the downside, but you will still have rallies to the upside during a dominant downtrend. Just like during a dominant uptrend, you will still have sell-offs, which is just natural profit taking. Okay, this is all part of the market cycle and all a part of market structure. It does not mean necessarily, you should not hype it up as a bear market reversal or a bear market rally or a new bull market beginning. When you start to hype that stuff up, it can distract you mentally from executing trades, and it can throw off your objective analysis of the market. It can make it harder for you to focus on new information being generated in the now moment. Okay, so to wrap up this video, I do have a couple other notes that I want to go over with the S&P 500 breakdown for this week. So we have a couple variables that we need to look out for this week outside of just focusing on the S&P 500. This Friday is the Jackson Hole event. Fed Chair Jerome Powell will be speaking. Last year, I believe it was, he crushed the idea of a Fed pause for 2022, and it hammered the markets. I think a year ago on Jackson Hole Day, the S&P 500 sold off like 100 plus points, if memory serves me well. It's a high volatility event. Manage your risk, manage your exposure into the event accordingly, and make sure you're not full porting calls and puts. I mean, manage your risk, okay? A trader is nothing without your capital, okay? We saw a pop in the VIX last week, which only fueled the downside pressure on equities. I think the VIX is close to topping out for the shorter term. Keep an eye on the $20 level for VIX. I lean towards rallies into $20 being sold off in the VIX, and that can signal a bottoming action in equities. And I think it's pretty unlikely before Jackson Hole, barring a black swan kind of event, barring a black swan event, I think it's very unlikely the VIX breaks $20 before Jackson Hole. And I think that can help support a bid in equities as well. Last but not least, watch NQ, the NASDAQ index. If NQ loses 14,500, the 14,500 level, if that level is lost as support, it can put pressure on equities and we can potentially see ES break 43.50. Okay? And for those of you that do not know, if you only trade options, you can trade options charting and watching ES, the S&P 500 future ticker. Okay, I do it all the time, and I highly recommend people to do it because you will be able to see information generated during Globex that is not offered on SPY charts. Okay, so if that confused you during this video, I wanted to hit on that real quick. I highly recommend you charting and watching ES if you trade SPY options. You can and will make money. Okay, I do it all the time. I have people in my team who do it. I highly recommend it. It is better than watching and charting SPY itself, in my opinion. So that is it for me in this weekly analysis. If you enjoyed this video, please like and subscribe. And if you have any questions for me, feel free to leave it in the comments below, and I will answer any questions that you guys have.